The stock market can feel like a secret club with its own confusing language, but it's actually quite simple. Forget the flashing red and green numbers for a second. Let's strip it down to the basics. Imagine a company as a pizza. The owners want to expand, so they cut the pizza into millions of tiny slices. Each slice is called a share. When you buy a share, you aren't just betting, you are buying a literal slice of that company. You become a part owner. If the company sells more phones or burgers, the value of your slice goes up. So where do you buy these slices? The stock market is just a giant digital supermarket, like Amazon, but for companies. The price you see on the screen is simply the exact point where a buyer and a seller agree to trade. If more people want to buy the pizza than sell it, the price goes up. If everyone wants to sell, the price drops. So why do it? Because historically, companies grow. And as they grow, your small slice becomes a bigger slice. Some companies even pay you cash just for holding their stock. These are called dividends, like a thank you bonus. Of course, there is risk. The ride isn't always smooth. Prices dip and crash. That's part of the game. But over the long run, the stock market has been one of the best ways to build wealth in history. You don't need to be a genius. You just need to start small, stay consistent, and give it time. I'm documenting my own journey growing a portfolio from small, consistent investments. So if you want real education, real strategy, and real results, you're in the right place. If you're serious about building wealth in 2026, go ahead and like the video and subscribe to the channel.